Accounting accidentally filing status and itemized deductions. This is Ken Boyd with the Accounting Accidentally website, where you can find over 400 blog posts and over 400 links to my YouTube videos. So I wanted to talk about a simulation question that I wrote for a client, at least a part of it, and you will see this on the REG test of the CPA exam. So you're preparing a group of tax returns. Read each question below and select the correct answer choice. You can use each answer choice more than once, and I've got a list here of items that people can match up as an answer. So number one, Joe is 37 years old. His wife died during the tax year. He is not remarried. His deceased wife had no income. He has 2 minor children living with him. Joe paid all the costs for keeping up his home for the tax year and is paid for all the support of his wife and these children. What is the filing status with the lowest tax rate that applies to Joe? Now, a couple points here. The first is that the married filing jointly is a lower rate than filing single, and it's also a lower rate typically than head of household. So your natural inclination may be, well, he's widowed. What about filing head of household? Actually, married filing jointly is better. So Joe qualifies to file as married filing jointly. Though his wife died during the tax year, he's still entitled to that. He can file jointly with his wife if the couple met the conditions for married filing jointly at date of death, and he did not remarry during the tax year. 2, Julie is not married at the end of the tax year and pays for more than 50% of the cost of keeping up the home. The home was the principal residence for more than half of the year for the taxpayer's qualifying child, and Julie is a U.S. citizen. What is her filing status? Now, this one's different. This one would be head of household because the question actually lists the criteria for complying with head of household filing status. More than 50% of the cost of the home, principal residence of the qualifying child, U.S. citizen. 3, John is the sole support of his 17-year-old daughter, Susie, who is a resident of Canada. What is Susie's status on John's tax return, if any? Now, this is a little bit of a twist because the daughter is a resident of Canada, which might make you think that she cannot be a dependent, but she actually can. In order to claim a dependent on a return, a person must be a U.S. citizen or a resident of Mexico or Canada. And she's also a minor child, being 17 years old. So that part was a little easier. It's the Canadian part of the question that may throw you. 4, Jenny's employer paid for a $100,000 face amount group term life policy on Jenny's life. Is this fringe benefit taxable or not taxable? Well, the current rule is if your employer gives you a group term life insurance coverage policy and the face amount, that is the amount that's paid to the beneficiaries at death, is in excess of $50,000, it's a fringe benefit that's included in wages and reported on her W-2. So many of you, I would imagine, if you're working full-time, have group term life as a benefit. You need to see if the policy face amount is more than $50,000. 5, this has to do with moving expenses. Marco cannot continue in the same line of work after moving to Florida. He held one full-time job for 20 weeks and another one for 6 more weeks during 2020. So he was working full-time. He expects he will start a new full-time job as an employee of a landscaping company in January of 21. The question, are his moving expenses a tax deduction on his 2020 tax return? This has changed in recent years. No moving expenses are deductible unless you are in the armed forces, and that is a change from recent years. They used to be deductible. 6, this is the difference between alimony and child support. In 2020, Mr. Smith paid court-ordered alimony of $5,000 from a 2018 divorce decree. Is the alimony tax deductible on the 2020 personal tax return? The alimony is deducted from gross income. That is different from child support. Now, tax laws change a lot, but you need to make a distinction for the exam between alimony and child support. They may be treated differently. Finally, the last question is with medical expenses, and this includes a twist. A taxpayer provides for one half of the support for a parent. The parent's income is $10,000 for the year, and the parent is a U.S. citizen. For purposes of the medical expense deduction, is the parent a dependent of the taxpayer? So this is a little odd. To qualify for the medical expense deduction as your dependent, the person must be your dependent either at the time the medical services were provided or the time you paid the expenses. Well, that makes logical sense. So they need to be a dependent. Taxpayers can deduct medical expenses paid for some individuals who do not qualify for the dependency exemption, such as a parent for whom the taxpayer provides over one-half support, even though the dependent's income is greater than $4,150, which is the current threshold. And in this case, the parent's making $10,000. The dependents must be U.S. citizens or residents of Canada or Mexico. So this is a case where medical and expenses can be deducted for a parent based on these criteria. Remember that you can go to conference room. The conference room address is the top of the page, which is an accounting community with blog posts, videos, live chat, and other live events. Thanks for watching, and we'll see you next time.